We're recording this on July 1st, which means the first half of the year is now in the books.
Finished.
Finito.
Done.
Done. So now we're going to take a look at how a portion of our portfolio performed.
And it's now a pretty good sized chunk of the portfolio, as it is, I think, for many of you. Things going up many hundreds of percent in 6 months.
That'll do it.
That'll do it. We're not going to look a gift horse in the mouth. Neither should anybody. But let's talk about this.
We have a few charts from our friends over at Fiscal.ai. You can get 15% off any paid plan with Fiscal. Fiscal powers our data over on chipstockinvestor.com. They're a great partner. And maybe you've been looking at some of their tools they've been building out. They have a great new news section. You can connect your portfolio. There's a ton of new features. So make sure you check it out. Fiscal.ai/CSI gets you 15% off any paid plan. Check it out now. We're talking about not our stock picks, but our actual portfolio.
Portfolio allocation portion.
Exactly. So this is a peek at our portfolio in memory. Sandisk, Kioxia, SK Hynix, Micron, Western Digital, Seagate, and then a couple of small companies, NVE and GSI Technology. Here's what that looks like in chart form. What you're looking at is the stock price performance in the first half of 2026.
Worth mentioning, the Kioxia stock actually outperformed Sandisk the first half of the year. We had several videos on CSI Live explaining the rationale behind this, thinking it was going to be a momentum trade this year. And obviously, you probably know the debate is raging. How long is this going to last for? And it certainly seems like it's not going to end, certainly not within the next 3 months, maybe not the next 6 months, maybe not even the next couple of years. So we're leaving this in place and not changing anything right now. We started here because these are just crazy numbers. Even if you started with a very small allocation to some of these companies 6 months ago, you're probably sitting on not just sizable gains, but probably a pretty hefty allocation of your portfolio to memory. In addressing that, I recorded a video with Jeff and Jason from Investing Unscripted actually last night. That'll probably be out next week sometime. But it's time to start thinking about, even if it's premature, risk management. Because like I said, even if you allocated small parts of your portfolio to some of these stocks, you're definitely sitting on outsized, not just gains, but allocation. Not saying you need to sell, but you need to start thinking about your strategy over the next 6 months, over the next few years, so that you get to keep those massive gains.
The alpha can be yours forever.
Yeah. Will they continue to go up? Yeah, it appears that they will. As of right now, the data indicates that they're probably going to continue climbing, but you can't just expect that to continue happening for forever.
Before we move on off of this chart, maybe we should just briefly touch on NVEC and GSI Technologies in comparison to what the others did. NVE at only 70% up year to date is obviously kind of a laggard, which in a normal market, 70% up would be fantastic. But GSI only up about 15%.
I think we're going to consolidate. Thank you for the reminder. I think we're probably going to part ways with GSI Technology, which is no longer kind of hitching its wagon to memory. They've been trying to do this custom AI processor thing. I'm not sure we need a really small cap like that anymore. NVE Corp, very similar to ticker symbol MRAM, Everspin, in doing magnetoresistive RAM memory and other sensors and spin qubit sensors and whatnot. So we kind of like that one. We're going to leave that alone. You're hearing it early. I think we're going to part ways with GSI Tech, which is totally fine. It was a very small position given its very small cap status.
And I'll just go back to a question. Do you usually participate in the momentum trade, or was this a first time?
Been doing this a long time. This is not the first time at all. Just probably within recent memory for everybody here, App 11 was kind of that. At least it was viewed as a momentum trade those first few years from 2023. And when we started covering it in 2023, we didn't jump on board right away. We still got in pretty darn early at the beginning of 2024. But that was kind of a momentum trade as the market caught up with the constantly revised earnings estimates that year and into 2025. This is the portfolio allocation series that we've been doing for a year now. And there's a place in all portfolios for different types of investments within the portfolio. Depending on how much babysitting you can do, some people only participate in momentum trades. Others take a little bit more hands-off approach. That's kind of our slant, is to not want to babysit the stocks all the time and let them run. And sometimes that works out fantastic. Other times we end up holding for too long. But overall, it's led to some really, really massive outperformance. Like, for example, this year, when we increased our allocation to memory from what it was already, and there was some skepticism at the beginning of the year, especially because we were in the midst of a downturn in the semiconductor industry that had started in October, November, and lasted all the way through the end of March. And here we are. Not the first time. Yeah, there's a place for different types of investments within a portfolio. That's part of the allocation strategy.
Okay, let's talk a little bit about some of the risks that could become more evident here in the near future with some of these memory companies. So these are the big ones: SK Hynix, Micron, Samsung. They're the biggest ones in memory manufacturing. And then CXMT is in China, and they're going to be having an IPO. So how could that affect the memory market?
It's worth repeating again. What is the best way you increase future supply and start to bring down pricing? If you're a company buying product to complete your final finished product or service, let's say you're NVIDIA or one of the hyperscalers and you're getting killed at the moment on massive increases in memory prices. How do you combat that? You agree to pay the high price right now. That is what lures more supply onto the market from the existing suppliers, including them. All of the big three increasing their manufacturing capacity right now to some extent. Micron in the US, SK and Samsung, both in South Korea and elsewhere. And that is now happening in China as well, which is also memory constrained in its domestic supply. So CXMT not available for purchase by US companies because of the trade war going on between the US and China, but they're still going to have an IPO so that they can raise cash to expand their manufacturing. But you have to think of the whole world, even though there's been these lines drawn where companies can't sell across borders now, especially in the last 5-6 years, that's become more pronounced. But the world is still a whole total market. And so any ease in the supply shortage has this tendency to bring down pricing overall. Complex economics. One thing we could point to, though, as maybe a rough example is the price caps that were put in place on Russian oil. And there were a number of things put in place to try to cap that. It's kind of like the inverse of what's happening now, but markets tend to find a way around these blocks. And if there's demand for something, the supplier and the buyer tend to get paired up one way or another. I think that's one of the biggest risks over the next 3 to 5 years is I think the memory companies are going to continue selling a lot of memory at elevated prices, at elevated margins, but we need to be mindful of the supply crunch easing because that will have the effect of lowering these really, really sky high profit margins. And in the meantime, for CXMT, YMTC, other domestic manufacturers in China, they're going to be buying a lot of domestic equipment because they're also blocked from buying the most advanced equipment from the Fab 5, ASML, Applied, Lam, Tokyo Electron, KLA Corp. So they're going to be turning to some of these companies to fill a lot of that need when they're building out their new fabs. 2 of these are private, state-owned. Maybe they'll have IPOs of their own on the Shanghai Exchange or maybe even Hong Kong at some point. But the ones that are traded on the Shanghai Exchange, Naura, AMEC, Watsing, sorry if I'm mispronouncing these terribly. And then the one that is also traded in the US that we've covered a number of times over the years is ACM Research, ACMR, which trades on the NASDAQ as well as the Shanghai Exchange, because that is actually where most of their sales actually take place, is in China's domestic market.
Okay, let's talk about optical. Here is our portfolio of optical companies. Lumentum is now the number 1 in our portfolio for this particular segment in optical.
Rate from highest performer to lowest performer first 6 months of the year.
Let's take a look at how these performed. I think that's what everyone wants to see. On this one, we didn't do stock price. We did total return for the first half of 2026, because if we did only stock price, the Vistance Network's little dividend special would make it look like it did absolutely nothing. So we wanted to try to reflect more accurately how these stocks performed.
Yeah, and some of them paid dividends like Seagate and Western Digital. We did this total return because some of these companies, the dividend is very much part of the story, like Broadcom, definitely Vistance Networks. Anyways, these were our allocations that we either added to or initiated the position in at the start of the year. And these are not even the best of the best out there. You mentioned the applied optoelectronics that many of you purchased last year or early this year that's done really incredibly well. But so have these guys. And specifically, I mentioned Lumentum already earlier, but Coherent also, in my mind, is still too close to call between the two. What I like about Lumentum is the more pure focus on optical networking, including they're going to start shipping the OCS systems later this year to their data center customers. And then Coherent has that domestic and European-based indium phosphide manufacturing supply that it is continuing to scale up, which could be a really crucial part of the supply chain. And one of the reasons, obviously, NVIDIA invested not just in Lumentum, but also Coherent as well. They gave them $2 billion each. So very much like those two, especially for the second half of this year, I think there's more fireworks in store for these.